Hello and a warm welcome. You've joined us on Market Cafe right here on ET Now. I'm Ashesha Dwaryu and with me is Kanishka Sarkar. And this is the show where we take you through all the cues that we are getting from global markets, which are the stocks that you need to keep an eye out on, either based on news or based on brokerage reports and all other stories that you ought to know this morning. But first up, let's get started with global market update then. And Kanishka, US markets ended slightly on a positive note, isn't it?
That's right. A very good morning to you first of all. Now let's take a look at how the Wall Street fared yesterday and the cues to watch out for today. Now big bank earnings and key inflation reading, that is going to be the focus on Wall Street, apart from of course the tariff related developments that we are tracking. Now, yesterday the US equities ended the first session of the week on a slightly positive note. The Dow Jones Industrial Average, that rose about 88 points or 0.2%. The S&P 500 that gained 0.1%, whereas the Nasdaq Composite that climbed 0.3%. However, stock futures are slightly negative as of now, but remember Wall Street is coming off a very positive session overnight, with stocks managing to eke out again even after US President Donald Trump threatened a 30% tariff on European Union and Mexico starting August. However, in the latest that on tariffs, Trump has even threatened 100% secondary tariffs on Russia, something to keep an eye out for. Meanwhile, investors are hoping that a second quarter earnings season that comes in better than expected will boost the stock market that's already at its all-time highs. Now, big bank earnings, they are all set to kick off the season this week, with JP Morgan Chase, Wells Fargo and Citigroup among companies that are set to deliver their quarterly reports later today. Other than that, the street also has its eyes on the US June Consumer Price Index that is due later today, seeking clues on how the Trump administration's tariffs, they have been affecting prices. The matrix is expected to show a 0.3% monthly increase and a 2.7% headline reading according to Dow Jones consensus estimates. So tracking all these cues, earnings, tariffs and inflation reading as we head into today's session. How are things looking on crude, on the crude front, Ashesha?
Yes, Brent crude is currently trading near that $69 per barrel mark. Remember, Brent declined nearly 2% in yesterday's trading session, and today as well it was started on a negative note. It is now down 0.3% as we speak, and as I mentioned, it is trading near that $69 per barrel mark. But since you just spoke about secondary tariffs on Russia, that is likely to have an impact on the oil purchases that India makes. So US President Donald Trump has threatened tariffs on Russia and secondary tariffs on all those countries which buy Russian energy. And remember, out of the total pie, nearly 30% of the oil that comes into India comes from Russia. So India is likely to be directly impacted if at all US President Donald Trump goes ahead and imposes those secondary tariffs on Russia. Now, apart from that, in fact, Goldman Sachs also came out with a note on the oil market, where Goldman Sachs says that they have increased their estimates for the rest of the year by $5 per barrel. They are now expecting Brent to average near that $66 per barrel mark for the second half of calendar year 2025, and this is on the back of lower inventories in the second half of the calendar year. So yes, oil market in focus on the back of secondary sanctions that could be imposed on Russia, and all buyers of Russian energy, including India, could be impacted on account of this move. Brent currently trading near $69 per barrel mark. But as far as gold is concerned, of course, we have seen that outperformance come in for silver as compared to gold, and gold is steady today morning as well. It is at about $47 per ounce mark, and we have seen some bit of lowering as far as safe haven buying is concerned, and this is because US President Donald Trump also said that he is ready to negotiate on tariff front with European Union. So on the back of that, safe haven buying has come down, and that is the reason we are not seeing any kind of major move as far as the yellow metal market is concerned. And Kanishka, spot gold is now trading near that $3,350 per ounce mark.
Alright, so that's how the commodity market is looking when it comes to oil and gold. But let's also take a look at how the Indian markets fared yesterday. Now, it was a muted start for the Dalal Street, where Nifty that slipped below 25,100 mark, although broader markets outperformed. Let's get Snehi to get us a market action roundup from yesterday's trading session.
Well, yes, yet another lackluster trading session is what we had seen yesterday. Nifty managed to close above the 25,000 mark, but below the 25,100 marks, 25,080 thereabouts to be precise, is where the Nifty shut shop for the day under a cut of 0.2%. Similar cuts coming in for Sensex, and in fact deeper cuts coming in of 0.3% on the Sensex. A 265-point cut is what we have seen on that index. It was a Nifty bank that has ended absolutely flat under a slight a negative bias. So that's what we've seen. India VIX saw a very minor uptick. From the Nifty 50 group of stocks, names like Eternal, Titan, Grasim, Industrial Bank did well. On the flip side, pressure continued to be built from Jio Financial, Tech Mahindra, Infosys, Asian Paints, Bajaj Finance and Wipro. So clearly the entire IT group of stocks was the biggest loser in yesterday's trading session. Down about 1.1%, so more than a percent cut across the entire IT pack. On the flip side, Nifty Realty was the biggest winner in trade yesterday. Names like Sobha, Godrej Properties, Brigade, Prestige Estates, all of them did very well yesterday. This followed by Nifty Pharma, PSU Bank, Auto, Metal, Energy, FMCG. This is the list of all the sectors that ended in the green. On the flip side, only Nifty Financial Services and Nifty IT, the two sectors that have ended the day in the red. The broader end of the market continued to be resilient. You had almost a 0.7% uptick move coming in on Nifty mid cap and a more than a percent move coming in on the small cap index yesterday. So optimism was seen from the broader end. Some stock specific action wherein Ola Electric posted its numbers and strong management commentary was up about 20%. You had Glenmark Pharma that continued to do well. A couple of chemical stocks, power stocks, all of these were in focus. Now, yesterday when we interacted with our chartists towards day's close, Aditya Agarwala believes that today Nifty could open around the 25,100 level and the real up move could be seen in Nifty Bank, first near 56,900 and then all the way up to 57,300. On the flip side, Sharan is not so optimistic. He says that we could open flat or see a slight bit of a cut on the Nifty. On the flip side, he's expecting a flattish downward opening for Nifty Bank. So watch out for the levels that where we open today, given the kind of sluggishness that we've seen in yesterday's trade.
So those are some of the important levels you need to keep an eye out on in today's trading session. And as Snehi was mentioning, Nifty ended nearly 70 points lower and Bank Nifty was absolutely flat yesterday. But how should you position yourself in today's trading session? And to understand the macro setup around tariffs and other macro economies, we now have Mr. Peter Cardillo, Chief Market Economist at Spartan Capital Securities, now joining us. Mr. Cardillo, thanks so much for taking your time out and joining us here on ET Now. US President Donald Trump yesterday made some bold comments surrounding Russia. One, he said he is disappointed with Russian President Putin. And he also said that if they don't come out with a deal over the next 50 days, then severe tariffs could be imposed. How do you read this, and do you expect the dust to settle down over a period of time?
Well, I think, obviously President Trump is imposing steep tariffs. Not only is he indicating to Russia that if a deal isn't made within 50 days, that tariffs will be 100%. But he's doing it with most other countries that letters were sent out. I think it's just a bargaining point. And of course, in the case of Russia, it might be a little bit different because we're not talking about tariffs on imported goods, but rather on the war factor. So it's a question now whether or not Russia begins to think seriously on ending the war in Ukraine. And so, the more pressure that Trump puts on Russia, along with other European nations, I think the greater the chances of some sort of a truce may happen. And let's not forget something very important, that the Russian economy is in dire straits. So he really can't afford steep tariffs, nor can he afford more sanctions. So there's a possibility that some sort of a truce could happen within the next 50 days.
Truce could happen over the next 50 days. Hi, Peter. This is Kanishka also joining in. Now, keeping it with the tariff space, I wanted to understand your view on the tariffs that are that will be imposed starting August 1st on EU and Mexico as well. You did previously say that tariffs at these levels are unlikely to be implemented, but that August 1 deadline is looming. So, do you believe a resolution will be out before that, or do you think these tariffs will be implemented at these levels?
Yeah, well, again, if I heard the question correctly, because the audio is not that great, the situation with Mexico, is like every other nation. However, Mexico did say that they have a contra plan, and of course, we'd have to see what this contra plan is all about and whether or not the administration accepts it. But I believe that there will be some sort of deals with I believe there'll be a deal with Mexico along with other major nations. It's just a question of what type of a deal. Do I believe that these steep tariffs that President Trump suggests that will be implemented on August 1st go through? I don't think so. I think there'll be much less. And then, of course, there's the question of whether or not, they will be met with a surge in tariff inflation. In fact, today we will be getting some inflation news, that is the CPI, and there could very well be some hint of whether or not inflation is beginning to emerge from some of the tariffs.
So that's as far as tariff and its impact on inflation is concerned. But he has also made some comments on tariff on Russia and secondary tariffs on all those countries who buy Russian energy. Do you think that this is merely a threat and Trump is using it as a negotiating tool, or perhaps could it translate into something concrete?
And I think it's a combination. I think it's a negotiating tool, and I think it's also a way of Trump trying to bring together the trade war and lessen its burdens and its burden that could have on the global economy. So far, we haven't seen any evidence of inflation popping up anywhere. We saw numbers out of India which suggest, inflation continues to move lower, and I think it all depends how steep these tariffs are going to be. So far, the higher end of the tariff scale is just a threat, and we just have to wait and see whether or not they will be imposed or whether or not they will have an inflationary impact. But again, I think that they're just negotiating starts, and that most nations will work out a deal, and whether or not we get 10% or 6% in tariff implementation of tariffs is yet to be seen, but some sort of a deal will be worked out. I don't think that Trump will go ahead with these steep tariffs.
Okay, so as far as the impact of tariffs is concerned, thank you so much, Peter, for joining us this morning and helping us decode the global market setup. On that note, we'll let you go. Thank you so much for joining.
Thanks.
All right, then let's move on and take a look at all the stocks that we should be keeping on our radar today. A whole host of stocks that should be on our list. Abhishek, Varun Dubey, Varun Arora and Rabinder from our research team are joining us now to take stock of all the stocks that should be on our list today.
Yes, HCL Tech has reported below expected operating performance post reporting below expected operating performance, the management has guided for a 3 to 5% kind of a revenue growth for FY26 against its earlier guidance of 2 to 5%. However, it cut down its EBIT margin guidance by 100 bits. Now management is expecting a 17 to 18% kind of a EBIT margin against its earlier guidance of 18 to 19%. Broadly, the management is raising alarm over the demand concerns in the manufacturing segment, especially related with the automobile segment. Based on this performance, there is no earning upgradation is expected, and stock is likely to remain range bound in the near term. Other than that, Sun Pharma has launched Leqselvi drug in the US market. Leqselvi is an anti-baldness drug, and as per the estimates, its peak sales for this particular drug in the USA would be around $900 million. Directionally positive for Sun Pharmaceutical.
Sun Pharma and HCL Tech in focus on the back of different news pieces. But Varun, several other earnings that came out post market hours yesterday, how were they?
Well, let me start with Tata Technologies because the overall results are mixed. The reason I am telling you mixed because if you look at the numbers on the face of it, it's a little bit weak. The revenues are down by 3.2%, EBIT is down by 16.6%. The margins have gone down by around more than 200 basis points, and also the profit is down by around 9.8%. And the company has actually attributed the weakness to delayed deal ramp-ups, the US tariffs and macroeconomic headwinds. But the company says that they have seen strong traction from Airbus, BMW, Volvo cars and new strategic deals, and also the company remains optimistic for the Q2 and also for the second half of FY26, supported by robust deal pipeline and reaffirmed commitment from most of the anchor clients. Now, if you look at Tejas Network, the overall results are weak because the revenue is down by around 87%. The company has reported a loss of around 194 crores versus a profit of around 77.5 crores, and the EBITDA loss has come at around 135 crores. So the results are weak. But the company has said that the BSNL 1500 crores 4G order that is expected to reflect in FY26. Now, let me tell you about Brigade Enterprises because that stock will also be in focus because the company has actually, the board has approved raising around 1500 crores, but this is through NCDs.
Okay, so Tata Tech, Tejas Networks and Brigade Enterprises focus on the back of results and fundraising plans. But moving on, and Varun, now coming to you, Oberoi Realty, Railtel and Deepak Fertilizers are the stocks that you've picked out for us. What's the news flow here?
Let's start from the Railtel Corporation. The company has received the work from the East Central Railways for works amounting rupees 264 crores, which needs to be executed by July 2027. Let's keep an eye on the Oberoi Realty, which is the Oberoi Realty Consortium wins the rupees 1919 crores CIRP bid for the Hotel Horizon, which is situated at Juhu, Mumbai. And the next is the Deepak Fertilizers. The company enters the long-term contract with Petronet LNG. The contract value is around 1200 crore rupees and the duration is for 5 years. Under this agreement, the Petronet will regasify the LNG for the Deepak Fertilizers.
Okay, so Deepak Fertilizers, Oberoi Realty and Railtel in focus on the back of those news pieces. But Rabinder, tell us which stocks are on your radar this morning?
Well, on back of good Q1 earning rallies, India can be in focus, where company has announced their Q1 FY26 number, and company reported revenue at rupees 957 crore as compared to revenue of 430 crore on a sequential basis, and company reported profit at rupees 95 crore as compared to loss of 32 crore on the last quarter. And apart from this, Rallies India has appointed Bhaskar Swaminathan as CFO. Apart from this, keep an eye on some of the energy stocks like Tata Power, where India has achieved 50% non-fossil fuel capacity 5 years ahead of its 2030 target, and India's total installed power capacity now stands at 484.8 gigawatt and 242.8 gigawatt power capacity from the non-ferrous fuel sources. So keep an eye on the energy stocks.
All right, so those are all the stocks that we should be keeping on our radar today. Thank you so much, Abhishek, Varun Dubey, Varun Arora and Rabinder for joining us and helping us take us through that entire list. All right, then let's move on and get Snehi, who's here to give us all the cues that the street will be watching out for today.
Well, yes, lots of cues to watch out for. After the WPI and CPI, now all eyes back home are going to be on some more macroeconomic indicators like trade data and unemployment data. So watch out for both of these very important macro-eco indicators. But globally, from the US, you have CPI numbers that will come out. Their inflation print is going to be crucial to watch out for, as is China's GDP. That's also going to be very important to keep a close eye on, along with retail sales and industrial production from China. And we also have industrial production numbers coming in from Japan as well. So IIP data from both China and Japan will also be very important to watch out for. In terms of global earnings, you have big banks coming out with numbers like JP Morgan Chase, Wells Fargo, Citigroup, BlackRock. These are going to be important to watch out for as well. But when we're talking about earnings, let's just focus back home. We've just kick-started the earnings season, and from the Nifty group of stocks, you have HDFC Life Insurance. That stock will be in focus on the back of its earnings. But even from the broader end of the market, from the non-Nifty 50 group of stocks, you have names like ICICI Lombard, ICICI Pro Life, Adani Wilmar, which is now known as AWL Agribusiness, Bank of Maharashtra, and a whole host of other stocks that will be coming out with their earnings, Q1 earnings. So watch out for all of these counters as well. In terms of corporate action and board meetings, watch out for IDBI Bank, Aditya Birla Real Estate, M&M Financial and CAMS. These stocks are going to be trading ex-dividend. It's going to be the last day to buy shares of TCS if you wish to be eligible for the record date of its dividend. It's also the last day to buy shares of Ashok Leyland to be eligible for their bonus issue record date as well. In terms of other events, some important Fed and Bank of England commentary is what we can expect. You have Dallas Fed President Lori Logan and Richmond Fed President Thomas Barkin that are all set to speak, along with Bank of England Governor Andrew Bailey, who's all set to give his annual speech as well. Reports indicate that Tesla is going to be opening its first showroom in India, in Mumbai, and the Axiom 4 splashdown back to Earth after a 14-day stint at the ISS are all going to be very important to watch out for. So keep a close eye on all of these cues.
A whole host of cues and events to keep an eye out on today. Thanks, Nehi, for joining us. But on that note, we need to slip into a very short break. More news and updates will continue on the other side. As we speak, we have Kospi, which is down 0.2%, marginal downtick coming in for the Korean market. We have Hang Seng, which is up 1.5%, 350 points higher for Hang Seng index. Shanghai is absolutely flat as we speak, 3520 is where it is currently trading. And ASX 200 is also up 0.5%, 8610. Nifty implied open is also suggesting a flat start for the Indian markets. It's up marginally by about 10 odd points to currently trade at about 25,180 odd levels after a subdued market action that we saw yesterday. Remember, yesterday Nifty was down about 70 odd points, and today Nifty implied open is suggesting a mild start for the Indian market. 25,180 is where it is currently trading. Kanishka.
That's right. So shifting focus now, as the Commerce Ministry team reaches Washington, Minister of Commerce and Industry Piyush Goyal spoke about the India-US trade deal negotiations. He's called India an oasis amid the global uncertainty. Let's listen in.
Between two nations, and negotiations are going on at a very fast pace and in the spirit of mutual cooperation, so that we can come out with a win-win trade complementing agreement with the United States. Global uncertainty, India is an oasis. India is a stable economy. India has a huge domestic market. 140 crore Indians themselves drive economic growth. Prime Minister Narendra Modi's visionary leadership is helping India transform into a powerhouse, into a modern powerhouse of industry, infrastructure, innovation, and clearly the world today looks up to India as an engine of growth, and we will continue to enter into modern trading arrangements with developed countries with whom we complement our strengths and their strengths, so that it can be a win-win for both geographies.
That's the word coming in from Piyush Goyal. But External Affairs Minister Dr. S. Jaishankar said that India-China relations are gradually moving in a positive direction. Delivering opening remarks during a meeting with his Chinese counterpart Wang Yi in Beijing, Dr. Jaishankar also said that both the countries have now made good progress in the past 9 months towards normalizing bilateral relations. He underlined that this progress is the result of resolving friction along the border and the ability to maintain peace and tranquility there. External Affairs Minister S. Jaishankar also emphasized that India-China relations are gradually moving in a positive direction. Let's take a look.
Our bilateral relationship requires that we take a far-seeing approach to our ties. Since our leaders' meeting in Kazan in October 2024, the India-China relationship has been gradually moving in a positive direction. Our responsibility is to maintain that momentum. In recent times, as you have noted, Excellency, the two of us have had several opportunities to meet at international events and carry out strategic communication. It is our expectation that this will now be regular and take place in each other's countries. We are marking the 75th year of the establishment of diplomatic relations between our two countries. We appreciate that the Kailash Mansarovar Yatra has also resumed after a gap of 5 years. I thank the Chinese side for the cooperation on this matter. Excellency, we have made good progress in the past 9 months for the normalization of our bilateral relations. It is the result of the resolution of friction along the border and our ability to maintain peace and tranquility there. This is the fundamental basis of our mutual strategic trust and for smooth development of bilateral relations. It is now incumbent on us to address other aspects related to the border, including de-escalation. Neighboring nations and major economies in the world today, there are various facets and dimensions of our ties. Measures towards normalizing our people-to-people exchanges can certainly foster mutually beneficial cooperation. It is also essential in this context that restrictive trade measures and roadblocks are avoided. I hope to discuss these issues with you in further detail.
All right, so that's the latest word coming in from the External Affairs Minister. But moving on to some macro data. Now, retail inflation for June, that has cooled to 2.10%. That's the lowest level since January 2019. Now, the sharp decline is largely driven by a drop in vegetable, pulses, meat and milk prices. Now, in fact, food inflation slipped into the negative territory in the month gone by. Varun is now joining us with the fine print.
Well, so the June inflation numbers are actually very low at around 2.1%. We were expecting the overall inflation to come at around 2.5%. That was the Reuters poll. And on a month-on-month basis, if you look, it has gone down from 2.82% to 2.1%, and it is actually at 77-month low. And the main reason is, one is the base effect that has led to a decline in overall inflation, and the next is the food inflation that has actually declined to around 1.06% versus 0.99% that was positive on a month-on-month basis. Now, why is the food inflation overall down? This is because of the vegetable prices which has gone down, the pulses and spices prices which has actually gone down on a month-on-month basis. Also, if you look, the reason I am telling you on a high base the overall inflation has come down, because if you look in the base, the overall vegetable prices were up by around 30%. So that's the reason, because the overall food inflation has gone down and overall inflation has actually gone down. Now, if you look on some of the more bifurcations, the urban inflation that has come at around 2.56% versus 3.1% on a month-on-month basis, and also the rural inflation has gone down to 1.72% versus 2.59% on a month-on-month basis. But if you look at the core inflation, that has actually come at around 4.43% versus 4.24% in the month of May, and actually it is on a 21-month high. The reason because the core inflation is high is basically the rise in gold prices, the rise in silver prices, and also the rise in metal prices. That has led to the core inflation increasing to 21-month high of around 4.43%. But the overall inflation, because of high base and because of lower food inflation, has gone down to around 2.1%, which is more than 6.5 years low.
Inflation has really cooled down. It is at the lowest level since January 2021. Varun, thanks so much for joining in. But we also spoke to Saugata Bhattacharya, independent economist. Let's listen in to what he had to say on the June CPI footprint.
I think core inflation again will have peaked in the month of June. From now on, it will be a gradual slide down in core inflation because the base effect of the last year, from July onwards, has been on an upward trend. And given the fundamentals of all the prices, whether it be metals prices, oil prices, particularly the prices that you see at the pumps, petrol and diesel prices, etc., we might actually see a cut if petrol prices, fuel prices, crude oil prices remain low. So I remain much more sanguine in terms of.
All right, so that's the expert view coming in on India's June inflation reading. But moving on, the aviation regulator, DGCA, has issued safety order for all aircraft registered in India. Now, all affected airlines must complete the required inspections by July 21st of this year and submit inspection plans and reports to the DGCA. Now, for more findings and what does this mean for airline safety in our country, let's go to our reporter Sameer for all the details.
In an important development in the aviation space, the aviation regulator DGCA has issued the order advising the airlines to do the inspection of the Boeing 737 and Boeing 787 aircraft related to the fuel switch control mechanism, and this entire inspection of the fuel switch has to be completed latest by July 21st, and the inspection report has to be submitted to the regional officer or the regional DGCA officer. So this inspection order came in the light that recently AAIB, the investigating authority of Air India's aircraft crash, they submitted the preliminary report to the Aviation Ministry, and which highlighted an important part that the fuel switch, it moved from run position to cut-off position at 13:38 hours when the flight took off. Immediately after a few seconds, they switched of fuel supply that moved from run position to switch off position. This was a very important aspect in the preliminary report, after which there were multiple questions that were raised related to the safety of the aircraft related to this particular aspect of fuel control switch. And in the same light, DGCA has ordered that all the airlines, they have to complete the inspection of the fuel switch control mechanism by July 21st. And not just the Indian aviation regulator, a couple of other international airlines, they have already started the inspection following the US FAA guideline or the recommendations. For example, Singapore Airlines, Etihad, and even South Korean Airlines, they have already started the inspections. And another important development also came in, where Air India CEO Campbell Wilson wrote a letter to the employees mentioning that the aircraft had undergone the mandatory maintenance, and there was no issue that was reported. Even the pilots, they have undergone mandatory pre-flight breath analyzer test, and no medical observation was done. There was no safety observation issued in the preliminary report. So these are a couple of important developments taking place related to Air India's aircraft crash, but the government wants to ensure that the aircraft safety, the entire parameters should be upheld, and the DGCA order is a step in the same direction.
After our investigation report was made public, even the Boeing industry, Boeing company, as well as GE Electric, which manufactured this engine, they also are not bothered to again remind that at least please now carry out the inspection, because we had such a ghastly accident. So that is very, I don't know whom are they trying to cover up or something, or they don't want to focus on their own.
And shifting focus then, Income Tax Department has launched a major crackdown on abuse of tax deductions and exemptions that are claimed during income tax returns. IT Department have roped in third-party sources and AI tools to detect fraudulent claims. Prakash Priyadarshi, my colleague, is now joining us with more details.
Yes, the Income Tax Department has initiated a massive drive against individuals and entities facilitating fraudulent claims of deductions and exemptions in income tax return. In fact, this massive verification operations have been initiated against organized rackets, false filings, and misuse of beneficial provisions under the Income Tax Act. In fact, advanced AI tools and third-party data are being used to identify suspicious patterns. The ongoing verification exercise is being carried out across the country that covers more than 150 premises. The Income Tax Department has come out with this statement which clearly stated that it has found that the wrongful deductions have been claimed under Section 10, 80 GGC, 80E and so on under the Income Tax Act, and exemptions have been claimed without valid justification. Employees of MNCs, PSUs, government departments and entrepreneurs are among those implicated, and the Income Tax Department is now all set to take strict action against these fraudulent claims and has advised taxpayers to file correct particulars of their income.
All right, so that's the latest we are getting on the action that is to be taken for tax evaders. But moving on to some more national news updates. Now, Group Captain Shubhanshu Shukla, along with other crew members of Axiom 4 mission, is all set to return to Earth today after spending 18 days aboard the International Space Station. Their return journey began with the undocking of SpaceX Crew Dragon spacecraft from the ISS yesterday at approximately 4:30 p.m. India time. Next up, devotees participating in ISKCON's Rath Yatra in Canada's Toronto were pelted with eggs during the annual religious procession. The incident has sparked outrage among the Indian diaspora.
The death toll in the Sigachi Industries Pharma plant blast in Telangana's Sangareddy district has risen to 45. One more injured victim succumbed in the hospital. 11 others are still undergoing treatment. And moving on to the world of sports, India suffers heartbreaking defeat. England beat India by 22 runs in the third of the 5-match test series at Lord's yesterday. India got bundled out for 170 runs, while Ravindra Jadeja was the top scorer and stayed unbeaten on 61 in the end.
All right, on to some global stories now. Trump threatens to impose secondary tariffs on Russia's trade partners at about 100% if Putin does not agree to a deal to end his invasion of Ukraine in 50 days. And I quote, disappointed Trump thought that they would have had a deal months ago. The U.S. president further announced that the U.S. would send billions of dollars worth of military equipment purchased from American companies, paid for by European countries and delivered to NATO allies to be sent on to Ukraine. Now, the announcement marks a shift in the president's support for Ukraine and underscores his growing frustration with the Russian leader. Let's go across and listen into what he had to say.
As you know, we've spent $350 billion approximately on this war with Russia and Ukraine, and would like to see it end. It wasn't my war, it was Biden's war. It's not my war. I'm trying to get you out of it. And we want to see it end. And I'm disappointed in President Putin because I thought we would have had a deal 2 months ago, but it doesn't seem to get there. So based on that, we're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple. And they'll be at 100%. And that's the way it is. That can be more simple. That's just the way it is. I hope we don't have to do it.
And another casualty in the tariff war, the U.S. Commerce Department has said that it will impose duties of over 17% on fresh tomatoes from top supplier Mexico. The tariffs will add to the price of a year-round grocery store staple for many Americans, while funneling more business to domestic tomato growers. This comes after withdrawing from a 2019 deal suspending an anti-dumping duty investigation. The U.S. and Mexico first struck an agreement in 1996 to regulate Mexican tomato exports and allow U.S. producers to compete fairly. The agreement was last renewed 6 years ago to avert an anti-dumping investigation and end a tariff dispute on the trade. Now reports suggest that the U.S. president is set to unveil $70 billion investment in AI and energy. The details of these new initiatives will be revealed at an event near Pittsburgh. The investments come from various industries that include new data centers and power grid upgrades and expansions.
Elon Musk has ruled out the possibility of a merger between Tesla and XAI, but said that he plans to hold a shareholder vote on investment in the artificial intelligence startup by the automaker. This comes in response to speculation about closer ties between his companies. And the comment follows earlier hints of a shareholder vote on Tesla investing in XAI, the developer of the Grok chatbot. Next up, Federal Reserve Chair Jerome Powell has asked the U.S. Central Bank's Inspector General to review the costs involved in the renovation of its historic headquarters in Washington. This comes amid the severe criticism from the Trump administration officials on how the Fed is being run. Now, the letter responded to concerns raised by the Trump administration and Republican lawmakers about the renovation. It stated that some features that had drawn criticism, like VIP elevators or dining rooms, had never been in the project scope, and others, including new water features, had been eliminated.
And on that note, we need to slip into a very short break, but more news and updates coming up on the other side.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.
At 8 p.m., I am not here to sugarcoat the truth. I am here to ask the hard questions. Because when others play it safe, I go straight to the heart of the matter.
It's on quarter basis, it is around 0.3% up. For EBIT, it is minus 9.2% down. For profit after tax, it is around 10.8% down. And for EBIT margin, it is around 171 basis point down. If we talk about the total contract value, it stood at around $1812 million, while in the last quarter, it was around $3 billion. If we talk about the total headcount, it stood at 2,23,151, while in last quarter it was around 2,23,420. If we talk about the management commentary, company looks more positive on the AI and Gen AI related projects, and for engineering, research and development services, company is showing a positive growth, and they are also positive in the future quarter as well. If particularly we talk about the IT service revenue, it stood at 15.1%, while in last quarter it was around 17%. So all in all, the results are way below expectation, and now we'll see how the stock will move.
All right, so that's how the earnings fine print looks like for HCL Tech. Thank you so much, Pulkit, for that update. But now let's also listen to what the management has to say about what to make for the rest of the year.
We had a decent quarter. Our net new bookings for the quarter was 1.8 billion. We also won a large consolidation deal in financial services this quarter, which is not accounted for in the TCV value for Q1. Bookings were good and well balanced across service lines, geographies, and verticals. We had a couple of large deals in the pipeline which were expected to close in Q1. These deals have moved to Q2. This delay is unrelated to external factors or macro factors. We are optimistic about their conversion, and if all goes as per plan, the TCV number should see a step up in the coming quarter.
And shifting focus to the pharma sector then, Sun Pharma will be in focus as it is announced that it has settled a patent litigation with US biopharma MNC company for an upfront payment over and above an ongoing royalty, preparing to launch a drug in the US. Shrishti, tell us more, and what will the stock reaction be today?
Well, that's expected to be positive for Sun Pharma because they finally announced the launch of Lexelvi, that is one of their key specialty products in the US market, and this is indeed expected to be a big one. Why so? Because analysts are expecting that in the times ahead it could actually be the second highest specialty product for Sun Pharma just after Ilumya. But let's first tell you what is this drug is all about. So Lexelvi is actually a drug which is used to treat alopecia, which is a hair loss disease, and in the US it's expected that almost 70,000 people do get treatment because of this, and they have this particular disease, and hence the market size is actually very big. And the other big announcement for Sun Pharma is actually that this particular drug was actually under patent with another pharma company, and now there is the settlement of
this particular dispute is already through. So post the settlement, the Sun Pharma has announced that they will be launching this particular drug in the US markets. And not just that, in terms of the exact amount with respect to the settlement with the other pharma company, that is Insight Pharma, that is not disclosed as of now, but analysts are anyways expecting it is going to be a big opportunity for Sun Pharma, wherein as per Elara, they are estimating that this product can actually become $200 million to $300 million opportunity for Sun Pharma in the next 3 to 5 years, which in rupee term can translate into 1670 to 2510 crores. In that range, the contribution can come in from this particular drug itself, and not just that, it can actually become the second largest product for Sun Pharma just after Ilumya. So that's the big news coming in for Sun Pharma this morning.
All right, so a big new drug launch expected in the US for Sun Pharma. Thank you, Srishti, for getting us that update. But shifting focus back to earnings then. Now, HDFC Life, that is all set to report its Q1 earnings. Now, let's go across to Varun Arora to get us more details on what the street is penciling in.
Yes, on HDFC Life, we are expecting good set of numbers. The AP is expected to grow by 13.7% on YY basis, driven by the low double-digit retail growth. And VNB is expected to grow by 15.2% on YY basis. Keep an eye on the VNB margin, where for the last 3 quarters, the VNB margin expanded by 220 basis points. Now, this quarter, we are expecting them to grow by 30 bips to 25.4%. This would be driven by the stable product mix. Also, keep an eye on the going forward guidance on the sales through bank sales and agency channel, product mix, and the management commentary on the VNB margins going ahead.
All eyes will be on HDFC Life's numbers later today, but that's all the time we have in this edition of the show. More news and updates will continue on the other side. Stay tuned.